You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Let's find out together, shall we? It is time once again for TWIFO. This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are having a good time these days. Hope you enjoyed our fun live show from the CBO on Monday. Always a good time when we get the band back together live with a little bit of an audience to have a little bit of fun on the option block. And, of course, all the other fun that's been popping off this week. Pro Q&As for all of you folks hanging out with our good buddy, the Last Emperor from Fidelity over there, tackling him. Epic session. Went long, tackling all your questions over there. So lots of fun to be had on the Pro, theoptionsinsider.com/pro. Welcome to all the new folks who dove in, took the plunge this week. Fun stuff to be had over there, including options oddities the end of every week. And we're coming up, man, we're already coming up on another Pro Trading Crate. You folks are robbing me blind on the Pro Trading Crates. But you know what? We like doing it. To get on over there, get your name in the hat before the end of the month. And you too can win fabulous prizes in the July Pro Trading Crate. As we go around the horn, see who's joining us on the old CME Group Hot Seat this week. I'm pleased to welcome back old friend of the show. He hasn't been on in a few months now, since May. So we're behind on our catch-ups with none other than Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to the show, sir. It's been over 2 months.
Well, thank you very much, sir. It's great to be with you, Mark. I'm looking forward to exploring these markets with you. A lot to talk about.
There is indeed. How are things going in Gramza land these days, sir?
All goes well, thanks. The weather here in the Chicagoland's been wonderful, which I've really enjoyed. And the markets truly have been interesting, not only price-wise, but politically. We've had a few things going on, so it makes everything interesting. I'm never bored when it comes to looking at the markets.
Oh, has something been happening politically? I'm unaware, sir. I must have missed it all. So we'll get into all that fun now, listeners, with a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything, lighting it up to the light side and to the dark side over there at CME Group this week. If you looked at the chart we tweeted out right before the show, and CME did as well, you would see that we are biased towards the red this week, listeners. After starting off the week looking optimistic, vol coming in, markets rallying, now we're starting to see a little bit of the red back on the old screen. Yesterday, of course, a major rout on the equity side of the space. And when routes get that aggressive, they tend to suck everything else down with them. It's the old adage, listeners. When it hits the fan, correlation tends to go to 1. Saw a lot of that yesterday. And we're still seeing some of the after effects of that because right now we are biased towards the red. I would say roughly 70-30 red over green. Also, our largest percentage mover is to the red this week as well. But Dan, it's been a little while since you've joined us, so I will give you the dubious honor of running with the movers and shakers this week, sir. So you could choose where you want to begin, and you could run through the report in any order that floats your boat, sir. Have at it. The floor is yours.
Well, thank you very much. I think let's start with the light side. Since you mentioned the dark side, let's start with the light side. And number 5 in the light side is rough rice, up 3.43%. Number 4 is soybeans, up 3.55%. Very interesting market. Corn, another one that's interesting. That's up 4.07%. And then number 2, lean hogs, up 4.46%. That was number 2 to the light side last week, being up 6.59%. And then number 1 to the light side is soybean meal, up 5.33%. So a lot of ags here this week as we look. In fact, everything's to the ag side because we're also coming into a time of year where it becomes critical. As we approach August, for some of these markets, it's a critical time. And we also need to look at that international flavor when it comes to those. But let's talk about the dark side as well. Now, number 5, WTI down 3.87%. Number 4, gold down 3.88%. Number 3, platinum down 4.03%. Number 2, Nikkei yen down 4.64%. And number 1 to the dark side is silver, down 7.19%. Now, that was number 5 to the dark side last week. It was down 4.61% if you don't remember that one. So silver is still floating towards the top when it comes to the dark side, we should say. But, silver is one of those, just like gold, it's one of those excuse markets is the way I refer to it. But we can talk more about that later. So that's kind of what we're seeing.
Well done,
when
sir.
It comes to
2 months off, and you haven't missed a beat, sir. Well done indeed. All right, let's keep rolling here. By the way, Dan, I'm looking at the CVOL for this week, and it seems like everything with the exception of metals. Once again, we have a strong bias on the CVOL for the week, and this time everything is pretty much pinning the needle to the upside on the CVOL, sir. Does that surprise you, or given the fact of what we're seeing mostly red out there, perhaps not so much, sir?
No, not so much. The CVOL is really kind of an interesting barometer of what the attitude is of the market. And so I think the mixture that we're seeing here it's reasonable.
Reasonable indeed. All right, let's get into it, listeners. Remember, you can run these numbers for yourselves. Just go to CME and CVOL in any browser, and that dashboard will come up. Then you want to go to the 1 week high-low range, and you want to go for the ordered list as opposed to the grouped list. And that will get you where you want to be out there this week. All right. Everything today is gaining a little bit of vol, which again, not surprising. And on the week, we are pretty much pinning the needle for the week on all of them except for one. I'll let you guess which one that is, listeners. We'll start at the top as we are wont to do and work our way down. At the top, once again, leading the vol list is the Treasury yield vol. Now, price vol, Treasury is not exactly known to being bastions of price volatility. Yield vol, though, 110.8, up 3.65 points, and pretty much pinning the needle for the week. The low came earlier this week at 107.15 out there. So a little bit of juice on the top here for Treasury. Looks like getting all that vol in pretty much today. So a big pop out there today, up 3.65 points today. And then we go below it to the one pretty much dark side mover this week on the CVOL front. It's the metals at a 17.37, up a third of a point today. They were at their low for the week yesterday at 17.07, and the high came last week, 18.19. So metal vol, except for today, coming in net on the week. And then we go to the treasuries again, this time to the price vol, 6.29, up about a quarter of a point. So that's nothing to sneeze at when it comes to vol movement in the treasuries, after all. You're starting at a base of around 6, so a quarter of a point is a meaningful move. And we're also pretty much pinning the needle for the week. The low came at 6.03 last week. Then the aggregate commodities CVOL, 32.51, up about a quarter of a point there as well today. And on the week, hanging out at the high for the week. The low was 31.58 earlier this week. Below that, we have the energy CVOL, 48.34, up 0.19 today. So not a huge move for them today. On the week, they are at the high for the week. The low was 46.10 set last week. And then we have the FX CVOL at a 6.35. That is up 0.16 today. And on the week, they've had a range of 6.08 a week ago and 6.35 again, pinning the needle to the upside today. And at the bottom of our list, the Ag Products CVOL at a 21.17, up only 0.14 today. So a quiet day today. On the week, the low was 19.85 a week ago. The high right now, 21.17. So there's your CVOL movers and shakers for the week. Dan, we covered a lot of ground already. In our traditional underlying movers and shakers, we've got a lot of ags, we've got some metals, we've got a sprinkling of energy, and of course, CVOL, we're kind of all over the place. So where do you think we should begin our journey this week, sir?
That's a tough one. We've had some markets that have been truly interesting. I mean, if you look at the currencies, Japanese yen, Aussie dollar, the loonie, those have all had tremendous movement. But what do we say? We start with energy.
It's like I've done this show with you before, so I already have WTI pulled up. So to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's get this party started. CMEgroup.com/TWIFO is the place to go to generate your own reports. When you're there, go into that asset class drop down, and you're going to go down about 3 slots to energy. Then in product family, you're going to go right at the top, keep it at the top for crude oil, then right into WTI under product. That'll get you to our old friend WTI, making some headlines as it is continuing to ease off. It's off almost 4% since our show last week. And on this week, it's off only about 0.5%. So obviously most of that move come in last week. 78.21 right now in that front future. In terms of action out there, is it an action-packed week? The answer is yes, 627,000 contracts. So WTI not messing around this week, listeners. Usually we see it somewhere between 400 and 450. So 627, again, nothing to sneeze at on this downside week in WTI. Dan, a lot of people have been looking at WTI of late, a lot of headlines. Ironically, we haven't really discussed WTI on the show in quite some time. This is the first time it's made it onto our radar in a while. So what's been catching your eye out there in the Texas tea of late, sir?
Well, it's really been such a mixture. We've seen a marketplace that's been struggling. It's been going down. I mean, just a few weeks ago, not that many days ago, it was around $83 a barrel. And today we got down to 76. So we've seen some movement to the downside. But Mark, what's interesting to me is how it's done it. In other words, it's just not falling out of bed. It's not one big gulp. We've seen that in the past. We saw it in latter part of May, for example, a big drop, fairly clean. This hasn't been. it struggled. It'd break, and then it would rally a bit, break again, rally a bit. And we saw it kind of stuck in a sideways market between $79 and $82. And then just a few days ago, this week, we broke below $79 a barrel. And today, we bounced off of $76 a barrel. What's interesting to me is that level. We've seen buyers coming in there in the past. In May and in June, this is a level we saw a bit of a bounce. And that's what we're seeing today. We're seeing a market that not just hit and stayed at 76, it hit and it bounced off of 76. So it's a little resilient at these levels. To give you an example, we kissed 76, we're at 78 now, a little bit above 78. So we're seeing that those buyers coming back in. The issue is, can they follow through? That when we've seen this in the past, just a few days ago, we had a nice move to the upside. And did we get follow through? That was on the 16th of July, where we saw that, or 17th of July, buyers came back in, but no follow through the next session. That was on a Friday. And now we're in the same boat. So on Thursday, we got low enough to find buyers. We have a nice bounce. Do they follow through? How do people feel about crude oil going into the weekend? You know, a lot of times when you see in this market, for example, when we were putting our highs in, you see a lot of evidence that sellers are at those higher levels. And part of that could be hedging. And maybe that's what we're seeing today. If it is hedging at 76, which is relatively cheap, then I don't look for a big move tomorrow. And the reason is, if you and I are putting a hedge on and we got it done today, there's no reason to look for, we're finished. We put our hedge on, we're done. And I think that could be a part of what we're seeing here. And tomorrow, I think, will give us some answers. Do we close strong tomorrow? Do people say, I like crude and I'm willing to hold it over the weekend, or at least until Sunday when it starts trading again at 5 o'clock Chicago time? And if buyers are here, we want to close above $79 tomorrow. We want to see a level of commitment in that market. From an option point of view, from my point of view, if you and I were a buyer, let's say of call options in this market, if this trade is not profitable in the next 3 to 5 days, I'd give it the big adios and stand aside, because we're not seeing the level of commitment you need for a trend. Just one other thought, and that there's something missing here. We see it not only in the energy, but we see it in metals. We see it in copper, for example, and that is China. China's economy better, but it's not robust yet. We're not seeing the demand coming in that the market has expected. So that's part of the piece that's missing here. And maybe that's some of the reasons why we haven't seen big follow through in the last few weeks for our friend Mr. Crude. So expectation, up day on Friday, close above 79 is a sign of confidence if we can see that type of move. So those are my thoughts on Mr. Crude.
The big adios. We missed that. Haven't had one of those on the show in a while, Mr. Dan. We love the big adios here on the show. You regaled us with this kind of saga of WTI selling off, then rallying back, and kind of paying attention to right now, see if it can follow through. Given all that, let's play a fun game just for fun. Maybe it's unfair for me because it's a lot of data for you to analyze, and I didn't warn you ahead of time, but it's kind of fun nonetheless. If you had to guess, given all that activity you just talked about right now, no cheating, no firing up the report for yourself. If you had to guess, what do you think is the most active, the number one most active option in WTI this week? So go ahead, take a flyer, give me a month and like a strike and whatever, call or put, whatever floats your boats.
I'd say strike $80. And I would say maybe Augie.
Augie 80 puts, you think?
80 calls.
80 call. Oh, so going to the upside. Okay, so looking
Yeah,
for a
I'm
little
going
bit
to
of
the
upside
upside.
action. You are close, sir. There are some 80s, but they're more like number 3. How about the SEP 75 puts, sir? Right where we kind of got to and bounced off of there.
Oh, 75. Now that's interesting. Very interesting, Mark, because at that level, that's the next level down that you would seen back in May, a lot of buying coming in at 75. So if we break below that, that means that people who were trying to buy this are now dumping it. And that would imply a flush to the downside. I think if we got below 75, the next target would be 73, about a two-handle move to the downside. That's interesting. And what month did you say, Mark?
The September 75 puts doing almost 28,000 contracts this week, Mr. Dan. So taking our top spot here on WTI for this week, on a very active week, listeners. And again, about 35% of the flow going up, actually 36.5% going up in the SEP contract that has 21 days to go. So we're going to hang out there this week, listeners. What is the vol in the SEP WTI? About 24.25, up nearly a full point, about 0.9. So getting a little juicier, a little richer, not surprising. A lot of red on the screen this week. And as Dan was detailing, a little bit of whipsaw action there. So that's probably going to juice up the vol a little bit. In terms of skew, we had a pretty aggressive investment skew last week. The puts were pretty bid, 7.7% bid. The calls were offered nearly 5% cheap. This week, 5.2% bid are the puts, so they've come in a little bit. And the calls, 3.5% cheap, so not quite as cheap this week as well. So the skew has mitigated somewhat this week. And like we said, the big dog out here this week, 27, almost 28,000 of the SEP 75 puts. Closing earlier in the week, so kind of playing out the way Dan broke it down. As we got close to that strike, folks were piling out of the 75 puts, closing about 6,000 each on Monday and Tuesday, and then opening with 6,000 on Wednesday and about 9,000 going up today against an OI of 17,000. So perhaps continuing the opening palooza out there and maybe bailing again. Either way, they got a little time. 3 weeks these days is like an eternity in these markets where everyone's playing all 0 day all the time. But still fascinating. SEP 75 puts. Did you have that on your bingo card, listeners? That's why we crunch the numbers out here. And then behind it, we go to number 2 out here, listeners. We actually have to jump a little bit. We have to go all the way out to December. And this time, Dan, even farther out of the money, the D65 puts, 18, almost 19,000 of those for number 2. Did you have that on your bingo card, sir?
No. And what's interesting about 65, gosh, our low since the beginning of the year, if I remember correctly, is around 70 or 71. And so 65s, boy, I love this, Mark, because it says something about attitude. It says something about anticipation. It says something about outlook for the market of what some people are contemplating. I got to tell you, I don't see 65s, from my point of view, hitting that level. I think 70 to 80 in that range, 85, would be expected for the rest of the year, unless we see something unusual fundamentally. And I don't see that right now. I don't see China turning around quickly. And without them really participating, very interesting.
Yeah, a lot of interesting activity on those D65 puts, listeners. About 19,000 going up this week. The lion's share today, about 12,000 today against an OI of about 38,000. So there's size open on these D65 puts. The rest of the week, much lighter. 3,300 on Wednesday opening there, 2,400 on Tuesday, and about 1,000 slightly closing on Monday. So the big action today on the D65 puts. Did you have 65 by Dees on your bingo card, listeners? I'm curious. And then we have a bit of a tie, a bit of a slugfest for number 3 here. Taking it just ever so slightly are the Dees 85 calls. So we do have some upside. You got to dig for a little bit, but it is there. Dees 85s, about 14,000 of those. Again, kind of active all week long. 4,300 today against an OI of 23,000. About 4,100 on Tuesday, actually slightly closing there. And then about 3,000 on Monday and 2,500 on Wednesday. mostly opening on those. Then we get to Dan's pick here. We have the SEP 80s. These were up about 13,500 of these trading this week. So pretty much slightly fallen to number 4, but fighting it out for the number 3 spot. Those have about 14,000 contracts open against about 3,600 going up today. So today actually I take it back. Tuesday was the most active day. 5,700 going up on Tuesday. Opening there, 2,000 on Wednesday and about 2,000 on Monday. Looks like back and forth opening to closing. So Dan, you were close on the 80 strike, just not in September. And it was a few points down our list, sir. So seems like right now, at least for this week, it's mostly downside in play. Does that surprise you?
Well, no, if you look at how we've behaved over the last couple of weeks, this is a market that we have a lot of supply. If you look at it globally, it's not a tight supply situation, and we have increasing demand. We're not seeing those metrics coming into play to really drive this market. So softness, yes, 65, I wouldn't expect. But though, Mark, even if you're now, let's say you're long the 65 puts, it doesn't have to hit 65 for you and I to make money either, right? So depending on their outlook, which is pretty bearish, I still don't see that number, but still, is it a possible thing? Yes, I think the downside could be more favorable here, but I'm really looking for a sideways move. It doesn't mean there's not opportunity. A $10 range, on the futures, if you're looking at the full-size contract, each dollar's $1,000. So is there opportunity? Yes. Do we have liquidity? Yes. So it's a very interesting market. It's one that I think is a good barometer of economy. The stronger the economy, the higher the demand for energy. We can look at some of the stocks, refiners, for example. In this price range, they're somewhat content. If you look at internationally, if you look at OPEC and OPEC Plus, in this range meaning around $80 a barrel, they're comfortable, especially if it stays above 70. Some of them would like to see it higher, near 100 actually, but this still works. So that's why I feel we're in a sweet spot for crude oil. It's at value is the way I would say it. It's not cheap. It's not expensive. It's at value.
Speaking of value, I'm just looking right here while we're talking, and back in the equity space, we were just talking about on the option block earlier. We were selling off this morning, then we were rallying across the board, and then NASDAQ rallying from a huge sell-off to a massive rally. Now we're back red again today, Dan. So quite the bit of whipsaw action on the equity. We might have to squeeze in a little bit of equities later on in the show, but we have on our movers and shakers this week, Dan, an embarrassment of ags, a whole bunch of metals. Any of those catching your eye? Or you want to go somewhere else, sir?
Well, I tell you what, we can look at precious. Gold, silver, copper, they all have a story that I think is interesting to take a look at. Do you have a preference?
Again, sir, I already have gold pulled up on my screen. It's like we're simpatico.
Go.
So to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Go into that drop down, listeners. Go in the asset class, pop out of energy. You're going to go all the way down pretty much to the bottom of the list to metals. Then in product family, we're going to hang out in the precious stuff. And then, we have a lot of precious metals on our list this week. We have silver, we have platinum, and we have gold, all in our dark side movers and shakers. We've been talking a lot of silver of late. We had Uncle Mike on the show last week, so we had to go silver. It's off another 7% this week, 4.6% the week before. So silver's taking a drubbing. We might want to get Dan's thoughts there. But we haven't talked gold in a little while here on the show, so maybe we'll start there in the big dog of the precious metals. 303,000 contracts. So pretty big dog this week in terms of volume as well. By the way, it is number 4 in our movers and shakers this week, off 3.88%. since our show last week. And coming into the start of this show, we were at 23.80, off about 42 handles, or about 1.75%. Just this week, again, go back to the end of our show last week, it's off more than double that. It's off nearly 4%. So a rough time here in the precious. I don't know, might be starting to get some of that back if this turmoil continues here, Dan. What are your thoughts on the king of the shiny stuff this week, sir?
Well, I think, not to sound like a broken record, but I think it still fits here, and that's our friends in China. We're seeing some challenges there, and it's had an impact here in gold. A couple things when it comes to gold. First, it's priced in dollars. So the strength or weakness of the dollar also has an impact. If dollar is stronger, look for weaker gold prices. We're seeing that today. The dollar is a bit stronger. But what I find interesting about gold, it's the rhythm that we're seeing here. Just a few days ago, we were around 24.80, and now we're at 23.50. So we've seen a fairly significant drop. When we came off the highs, we had a big drop. Then it caught its breath. It's what I call a benchmark candle, or it's a candle that's large and it remains dominant. And we got up near the midpoint of that candle and we fell out of bed after that, which is really what we're seeing today. And the big push we had down was on 19th of July, just to give some reference here. The next 3 days, next 3 sessions, we pull up. If you look at a chart of that, we never got a close above the midpoint. The midpoint and the high of the 19th, I think, are important references technically. And today, we break to the downside. So the way we came in on July 19th is the way we're going out today. So what does that mean about tomorrow? Well, again, we've got Friday. Do people want to go home short gold? Are they willing to do that? We also know something else about gold at these levels where we are right now, that just a few days ago, back in the early part of July, we kissed it 3 times and we found buyers each time. So they did come back into the market. Is that what we're going to see here? Remains to be seen. So what are we looking for tomorrow? One, I wouldn't look for a big day down. I think it's already absorbed the news that's out there, unless it gets something new. And we got PCE tomorrow, so that could have a tremendous impact. But that aside, do we look for another big day down? No. Do we look for lower prices? Possibly. And we'd look for a bounce. In other words, you wouldn't be surprised to see it make lower lows, but to pull back by the end of the session. That would be more typical. In fact, that's kind of what we saw a few days ago. So that wouldn't be unusual behavior. The other thing, the important level we would want to look at here would be around that 23.75. Do we get a close above that? And you'd want to see that by the close of Tuesday. If we can get a close above that, ideally, by Thursday, you want to be closing above 2,400. In other words, we want to go back up towards 2,400 like we came down. The longer it takes, if it does go back up, high probability we're going to go right back down again. So, and gold, we were talking about crude being at value. I kind of think gold is. I mean, if you look at where gold's been 2,300 to 2,480 for the last few months. So gold isn't cheap based on the last few months' activity, and it's not expensive. It's not to the upper range. It's kind of in the middle. Right now, pushing a little bit below that middle. So if it does break lower, the next level, I think that would be important for us to take a look at, and that's a 2,300. If we get down there, how do we get down there? that would be the next thing we'd want to look at if indeed it does break lower. But I'm not looking for a big day down tomorrow. It'll be interesting to see how we close going into the weekend. And again, watch the dollar, watch China in terms of their economy.
China. You're just a broken record, Mr. Dan. It's all China.
I know.
And we haven't even gotten to copper. That's usually the big one with China, right? So
yeah,
China,
real big.
China just cannot be escaped out here. You know what else can't be escaped? I won't make you guess, Dan. Is some upside yet again in gold here this week. Interestingly enough, about 31% of that 300,000 contracts is going up in the SEP contract that has about 33 days to go. But we're not actually going to start there. We're going to start a little bit later here in DEES, the DEES 2600s. We'll get there in a second, listeners. First, let's break down, because SEP is leading the dance out here, even though December really has a lot of paper as well. Let's go to December as well. The future in September, 2380, and the future in December, 2404. Let's go to DEES first. What is the vol out there? 14 1/3, off about 1/3 of a point this week. Skew-wise, the calls are bid. It's a question of how much. Last week, the calls were 7.9% bid. This week, 8.4%. So ticking up a little bit. The puts, 4.9% cheap last week. This week, 5.1% cheap. So puts getting a little cheaper. Calls getting a little bit juicier out there. And that's probably because we saw just a call palooza up here in December, listeners. In particular, the DEES 2600s going up 10,000 times. That was our most active contract this week. Active all week long. The big day was Monday, about 3,000 exactly, slightly closing there. Actually, Wednesday we did 3,200, so slightly more of those, also closing there. 2,400 today against an OI of 4,200, and 1,500 on Tuesday, slightly opening there. And you might think, looking at this paper, actually looks like it does kind of line up with the 2,700s. They did 1,000 fewer contracts, only 9,000 on the week. But they line up pretty well, about 3,000 on Monday. So it looks like it could have been a roll, 2,700. A roll there, but the rest of the week they kind of move in lockstep. 1,500 roughly each on Tuesday, opening on both. About 3,000 roughly each on Wednesday, closing on both. So doesn't seem like it's a roll. It seems like it's just a vertical, a 2,700 vertical here in December, which again, that's roughly 200 handles out of the money. It didn't go up 1-to-1 today. It went up 2,400 of the 2,600s today versus 1,600 of the 2,700. So that helps to account for some of that discrepancy there. But a 2,700 vertical, you like that, listeners, in December, a couple hundred handles out of the money? Are you a buyer or a seller of that at this point? And then for number 3, Dan, this might be one of my favorite prints of the week. We always have some of these fun outliers out here. Now, Dan, we know calls are going to be active here in the precious metals. And we know, sometimes far out of the money calls are going to attract some attention. What if I said to you our number 3 most active contract this week in gold, Dan, was not even December. We're not talking into 2025 or anything like that. We're just going to September. So we're only going out 33 days. How about the SEP 4000s, Dan? Did you have that on your bingo card? 6,215 of them going up, all opening on Wednesday, and about 800 almost today. So a total of about 7,000 of these things trading this week. Does that float your boat, sir? SEP 4000s?
I'm in shock, is what I would say. No, what's interesting is you figure in general, most people are bullish when it comes to gold in general. And this is a perception market. I mean, what is the value of gold? It's not really so much a supply demand. We're not growing gold. It's not that kind of thing. It's perception. It's what people believe it is. And there are some economics to it as well. But in general, people have a tendency to be bullish. And we've been locked since the beginning, almost April, let's say, that 2480 and 23 even on the downside. So we've really been in that sideways type mode again that we've been talking about. But boy, talk about optimism. I did not see that one coming.
Yeah, this quote unquote meme type paper is starting to percolate in a lot of products, not just in these meme equities here. I'm looking at other paper that day on Wednesday to see if anything else could have come. Not that anything really makes sense to roll to the 4,000s. It looks like someone closed at 26.5, 27.5 vertical about 3,000 times. But even still, if you're taking that off, you're not going to roll to the 4,000s. These are at a penny at best. It also brings up an interesting point. I'm sure I'll have to go look at the chain, but I'm sure you could get lower strikes than the 4,000s for probably that same price. I'm guessing you could probably get 36, 3700s for not that dissimilar of a price than the 4,000s, right? They're all kind of nonsense at that point. So this is the type of, I guess you can call this a risk management trade that we've seen a lot in a lot of other products. For some reason, they just choose a strike and they just buy it all. And they don't care that they could buy strikes far below it for the same price. I mean, there's literally no economic reason to do the strikes that they're choosing. And yet that's where they're lining up. And we're seeing it all over the place. In commodities, we're seeing it in, big names like NVIDIA, people trading the 2,000 calls with a day to go, all kinds of nonsense, Dan. It's crazy. What are your thoughts on this? I guess you could charitably call it risk management paper.
Well, I suppose one thing I was thinking of when you were going through that is, can we justify it with, like in gold, was for the ETF? Like GLD is physically backed, so that can have an impact on gold demand. But something I don't see it reflected here, and it doesn't make sense to me at this point, and maybe we'll see it tomorrow. But India, second largest consumer of gold, they were surpassed by China a number of years ago. But India, on the import tax on gold, changed it from like 16% to 8%. So you would think there'd be a bit of a bounce in gold, but we're not seeing that at this point. And these other outlier prices, I don't know. It's not attractive to me because the probability is so low. It just doesn't become of interest. Other than I'm amazed when you come up with these, Mark. It's really interesting. But from a trading point of view, not my appetite.
No, and it's really starting to just dominate a lot of the products we talk about week after week. We're metals, a lot of the metals, obviously, too, ridiculous. I think we talked about the SEP 75s not too long ago, not that dissimilar of an out-of-the-money strike in silver. It's starting to creep up more and more. Speaking of creeping, our show's creeping on with us already, Dan. We're already coming up against it. I know we've hit on metals, we've hit on energy. Looks like we have a lot of ags lighting up our light side. So what do you say we head there next, sir?
Sure.
All right, listeners, to the world of ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, ags are pretty easy to find. Just go to that drop down, go to the top of the list. It's an alpha order list, after all. You will find the ags. And our entirety of our light side is all ags. Number 5, rough rice. Number 4, soybeans. Number 3, corn. Number 2, lean hogs. Number 1, soybean meal. Ags are inescapable this week. So, Dan, where do you want to start in that list, sir?
Well, how about let's start with soybeans.
All right, listeners, to the beans we go. So go in that ag, go in that drop down. We're going to go to product family right at the top there, grains and oil seeds. And then from there, we're going to go in product down 3 slots to soybeans, trading 1,115 and a quarter to be precise. Up 18 handles or about 1.6% out there since Monday. Of course, since our show last week, it's actually our number 4 mover, up 3.5%. And is there some paper out there this week? Yeah, I think you could safely say so. Outpacing gold this week are the beans, 367,000 contracts. So good choice, Dan. What's catching your eye out there in the beans this week?
Well, beans are always interesting, especially this time of year. For us in the Midwest, which is where I'm located, this time of year is a critical time, especially as we come into August. Soybeans is something that can kind of grow like a weed in a sense coming up to now. As we approach the first couple weeks of August, moisture becomes critical. And it does because you want to see a large number of flowers on the soybeans. You want to see large pods, which has an impact on yield. So the first couple weeks of August for our friend Mr. Bean is important. And we're looking at hot, dry weather, not only in the Midwest, but we're also looking at in other parts of the world as well, too. So we're seeing slower demand for beans right now. We're also seeing cheap Russian exports, which has also pressured wheat. Soybean meal, corn, wheat, they're all used for animal feed. High protein would be soybeans, but most of our corn that we grow, it's for animal feed by far in our country and other countries, and wheat. That can be a substitute as well, depending on how the pricing's working. But we're also looking at that demand internationally that's coming to buy our product, and how does it compare to Brazil, to Argentina, Uruguay? Those countries also produce a lot of beans as well. Brazil's number one in terms of the world. So again, as China goes to buy beans, they shop just like you and I do. Where do I get the biggest bang for my yuan? Who's got the best quality and at the best price? And when it comes to this, it truly is a global market, which is also what I find interesting. So for beans, we're coming into a critical time for that market. Next few weeks are going to be a big deal, I think. And what we've seen is that it got cheap enough that buyers did start coming in. When we got around 1030 or 1035, I think it was 1034, that's where we started seeing evidence of buyers coming back in. And so far today, they're holding on. We're seeing a positive day for that market. Then the issue, next target, $11. Can we get $11 beans coming out? And gosh, when I look at these numbers, though, double-digit numbers, I remember, that doesn't feel like it was that long ago, but beans in the teens, that would be the cry on the floor when they're around $6 or $7. So we're seeing a lot more expensive product, and we're seeing truly a global product that it fascinates me where it fits in. So when you look at beans, we need to think about other producing countries. The dollar, our dollar, is it stronger, weaker? So are beans getting more expensive or less expensive? And right now, we're seeing some positive action in this market. So if you were long beans, you want to see it staying above that 10.50 or so, around $10.50. We don't want to go back to that range. And if it does, you want to see it bounce. Again, next level that you'd want to see beans getting to, ideally by the end of next week as we finish this month out, and that's $11 beans. So that's kind of where we are in that market. It really is interesting to me.
Beans in the teens indeed. Not this week, though, listeners. As Dan was saying, bouncing on the march here towards 1100. We're going to go out to the November contract. That's where about a third of the paper was going up this week. Again, a pretty active week, 367,000 contracts on the tape. What is the vol you might be saying in November soybeans? It's an 1871, up 1.25 points. So getting a little bit frothier out there. In terms of skew, there wasn't much to speak of last week. The puts 2.1% cheap and the calls 4.1% bid. We've come in on both of those now. The puts are essentially flat and the calls are about 3% bid. So taking a little bit off the top on both wings there. And in terms of action, the number one most active contract here in the beans this week, November par puts, 1,000 puts, nearly 15,000 contracts this week, 14,825. The big day is today, 5,200 against an OI of 34,000. Not surprising there's so much OI lining up there. It's a psychologically important level. And then Tuesday, about 5,000 as well, opening there. 2,400 on Monday and 2,100 on Wednesday. Opening pretty much all week long. So a lot of opening on the par puts here in November. And then right behind it, we have the November 1,200 calls going up about 12,600 times here for number 2 this week, listeners. The big day for those was Wednesday. 5,100 on Wednesday, opening there. 4,400 on Tuesday, also opening. 1,100 today against an OI of 12,000. So not much today. And Monday, about 1,800, slightly closing there. So 1,000 puts, 1,200 calls. Maybe some risk reversal action here, listeners. And then number 3, we have the 1,100 calls. So that's what Dan was just talking about, that 1,100 strike going up nearly 10,000 times this week, 9,600 times. The big day for those was not today or Wednesday. It was Tuesday. 5,300 going up on Tuesday, mostly opening. 2,000 exactly on Wednesday, opening there. About 1,000 on Monday, slightly closing. And 1,300 going up today against an OI of 9,100. Dan, I could sink my teeth, pun intended, into more beans. But we're kind of coming up against it. You want to hit one more ag before maybe we squeeze in a little bit of equity, sir? What other ag is floating your boat?
Well, I guess how about wheat? That's another global market.
Okay, to the world of wheat we go. Listeners, pop out of that beans, drop down. You're going to go up only one slot. SRW wheat right above soybeans, listeners. So pretty easy to find out there. And then where is Chicago wheat hanging out right now? 537.5, off about 5.25 points, or about 1% this week, just outside the movers and shakers for us this week. Also, one of the few ags that's actually red this week, Dan. What's catching your eye in the wheat, sir?
Well, we're seeing, again, it's another global market that we're looking at, that big picture, and we're seeing positive and negative. If you look at major wheat producers, you need to look at Russia, Ukraine. France is the largest European producer, Canada, India. Actually, although India consumes a lot of it, China is a huge producer of wheat, but they consume it. China actually imports wheat, and Australia. They buy some of that wheat from our friends in Australia. I think Australia is like the 5th or 6th global supplier of wheat. So those are countries that we want to look at in terms of production, weather conditions. Is it, wheat is a grass. And is it favorable for it in terms of weather? It can be fairly tolerant, but some of the concerns were weather conditions. But it looks good globally, and it's why wheat is so cheap. I mean, the thing about wheat, if we think about it, when was that? That was in May. In May, we had wheat around 735. All right, and so at 735, and now we're at 537. So it's been a huge drop for this market. Thank God for farmers. It's such a tough business. And to be in that business and not hedge, I don't know how anybody could do that. But using options or futures. But right now, we're seeing some softness. What's interesting about wheat, every time it's rallied between 550 and 555, they sold it. And when I say every time, I'm talking about, five times. When we've gotten above 550, it was sold, which implies that people were locking in hedges. Why at that level, I'm not really sure. But if it's farmers trying to do that, I think it's kind of a desperate move. But what's interesting about it, we haven't seen follow through. In other words, if they're selling 550, we don't see it dropping down to 520 or a big drop down. So far, we haven't seen follow through, except today. Today it is breaking lower. But the issue is, will it have legs? If it does, that means by Tuesday or Wednesday of next week, we should be around 525. That's what you're looking for. So if you're looking on the bearish side, you want this to move quickly. So within the next 5 days, you'd want to be around 525. If you're not, it implies wheat's going to go sideways. Not necessarily a rally, but basically a sideways market. And Mark, I can't wait until you tell us about what you're seeing on these options. I mean, is it the 550s, which are closer, or the $6, or somebody really optimistic, or $4 on the downside? Enlighten us, Mark. I want to hear what you have to say.
Unfortunately, nothing as outlandish as we were talking about earlier. No, let's say 1,000 level Chicago wheat or anything outlandish like that. How about the 540 puts, Dan, with about a day to go? So we're getting pretty close to the fire. 0 day all the time, infecting Chicago wheat now as well, sir. Looks like about nearly 5,000, 4,400 going up this week. The big day was Monday, about 1,500 opening there. About 1,100 on Tuesday also opening, and about 1,100 today against an OI remaining of about 2,900 out there. So 1 day to go, 540 puts. Not the most exciting thing, but we can only give what the paper is giving us here. 550 calls also going out in a day, so a lot of near-dated flow here in Chicago wheat. The big day for those actually today, 1,781 against an OI of 2,200. So again, those are 550s. We're at 537.5. So that'd be a hell of a move in 1 day. But we've seen crazier things. Maybe folks are getting the heck out of Dodge and taking what little value they have left on those 550s off the tape. Either way, that was a big day today, and 1,100 on Wednesday. Couple of hundred each Monday and Tuesday, not much to speak of. And then beyond that, we get out to, let's go to September, the 600s going up 3,000 times this week, listeners, as well. So 600 calls in September, the future 537.5. Seems like a pretty decent move. Looks like someone was bailing on them all week long, though. 1,500 they closed on Wednesday, 1,000 today against an OI of 5,300. And about a few hundred each on Monday and Tuesday there. So 600s in September also leading our dance. But Dan, I'd be remiss if I didn't ask you in the time we have remaining. Obviously, on the equity front, things have been pretty tumultuous. In fact, since I told you earlier in the show that we had ticked red, we are now back firmly in the green. S&P up about 0.4%, NASDAQ up 0.33%, Dow up nearly 1%. So we are firmly in whipsaw territory. As you mentioned, a lot of it driven by the geopolitical news. Also, we are in earnings season as well, so that is also wreaking havoc on these markets. So what are your thoughts on these wild equities we're seeing, sir?
Well, we saw Q2 coming out, up 0.28%, 2.8%. They were expecting 2%. It was 1.4% last quarter. So we're seeing some positive things in that regard in terms of the economy. The other thing I'd like seeing was that personal consumption was up 2.3%. And even if you take out durable goods. Let's talk about that too. That was a goodie. That was down 6.6% month over month. But if you take out transportation, it was up 0.5% month over month, better than the 0.2% expected. Jobless claims are down 10,000. So we have some fundamentals out there, but we got PCE tomorrow, and people are so excited about that because what does that tell us about inflation? And the Fed likes to look at that. If it's down, look for an up day going into the weekend. If it's higher, I'd look for a sideways to lower move, maybe even a dramatic move, because that is the benchmark that the Fed does refer to. And it does set the tone for the upcoming meetings. We're seeing a market right now that's in a perception phase. The perception is the Fed will lower rates in September. And anything that can shake that right now is really going to create some volatility for that market. And the way they're shaping up, as you just mentioned, Mark, is that it implies we could get a bounce to the upside tomorrow because they're buying the break right now. And so it could be people who sold it yesterday are clearing the decks. They're evening up before we come into the PCE, which would be a very logical thing to do. A lot of institutions I deal with would do just that, coming into that kind of number. And where you can see it in futures is watch the European session. As it comes into the U.S. session, a lot of trading desks there will go neutral. And you'll see a little bit of a sideways move intraday as it comes into our time zone. So tomorrow, 50-50 in terms of whether it's up or down, because it just depends on that PCE.
Oh, a lot to take in there. So really quickly, you mentioned the political stuff. At the start of the week, were you surprised that the market seemed to take most of this in stride, what coming out of the weekend and actually rallying and crushing volatility a little bit into the start of the week, sir?
No, because was it important? Yes. Was it critical to the outlook for the market? Didn't appear to be so.
We'll have to leave it there, sir. The music says we are out of time. Before we go, Mr. Dan, if folks want to sink their teeth into even more of your analysis across a wide variety of products, where should they go? What should they do, sir?
Well, they go to a website, dangramza.com, and there's a free video there. And if you've never looked at futures, a place to begin is just watch them. Take a look at them. And there you'll see red and green lines, which represent buy and sell levels from my point of view. These are not buy and sell recommendations. And you can go back, I think, 10 years and look at, they're all recorded. So you can see, all right, what did he say when this happened? And what was he showing as a buy or sell level? If you see a dash line, it means it was just something that happened earlier in the week. And to my total amazement, it's watched in over 150 countries. But anyways, that could be a resource.
There you go. Check it out. Dan Gramza, Gramza.com is the place to go. You know where to go to see these reports and everything else. CMEGroup.com/TWIFO is the place to go to begin your journey for the TWIFO reports. Beyond that, you can kick into CVOL, FedWatch, education, a lot of great stuff over there. But begin your journey, CMEGroup.com/TWIFO. Unfortunately, that's going to end our journey on the network for today. Back again tomorrow, noon Central, 1 p.m. Eastern, for a little bit of vol action on volatility views. And then after that, exclusively for you cool kids in the secret club, we come back one final time for some options oddities action. What's going to light up our tape there? Well, you got to tune in to find out. And then we're back again on Monday for the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.